Banks are paying $300 to $600, sometimes more, just to open a checking account. Real money, deposited straight into your balance, usually within 90 days. So why does almost nobody you know actually have one of these bonuses sitting in their account? Because the banks have built in a few small rules that trip most people up. Today I'm going to show you exactly how bank bonuses work, why the banks are happy to pay you, and the quiet traps that make people miss the money. Welcome to the Money Mind. I am your guide through the money noise, and my job is to separate what actually moves the needle in your life from what just sounds good on the internet. Bank bonuses are one of the cleanest free money plays out there, if you do them right. Boring, repeatable, mostly tax reportable, but very real cash. Let us break this down in the order that matters. What the bonus actually is, why banks are willing to pay it, the 3 requirements you will run into, the quiet traps that kill most bonuses, and how to actually walk away with the cash. A bank bonus is a sign-up incentive, the same way a credit card offers points when you open a new card. A bank offers you cash if you open a new checking or savings account and meet a short list of conditions. Typical amounts right now sit between $100 and $700. The biggest offers, around $600 to $800, usually come from the national online banks that want more customer accounts in a hurry. Here is the mental model. A bank bonus is like a signing bonus for a job. The bank is hiring you as a depositor. They want your paycheck flowing through their system, because once it does, they can lend that money out to other customers at a profit. The bonus is the cost they are willing to pay on day one to acquire you as a long-term account. So why are banks so happy to hand you $300, $400, $500? It comes down to a single number called customer lifetime value. The average checking account customer stays with their bank for around 16 years. 16. That is longer than most marriages last. Over those years, the bank earns money from you in 3 quiet ways. First, they lend out your deposits at roughly 4 to 7% while paying you basically nothing on a checking balance. Second, they collect overdraft fees, wire fees, and out-of-network ATM fees. The average American pays around $170 in bank fees every year. Third, they collect swipe fees every time you use your debit card. Add those up across a decade, and a typical customer is worth somewhere between $2,000 and $5,000 in profit to the bank. When you look at it that way, paying you $400 on day one is not generosity. It is a rounding error on what they expect to make from you over time. That's why these offers exist, and that's why they are not going away. Now the requirements. This is where most people lose the bonus. Almost every offer uses one or more of 3 hoops. The first is a direct deposit, usually somewhere between $500 and $3,000 within the first 60 to 90 days. That is the big one. The bank wants to see your paycheck actually route through the account, because that is the signal that you are a real long-term customer. The second hoop is a minimum balance, where you have to keep, say, $5,000 in the account for a set period. Think of this one like parking. The bank is paying you to leave a car in their garage for a month. The third hoop is debit card activity, a certain number of swipes, usually 10 to 15, inside the first 2 months. This is easy money if you already use a debit card, and easy to forget if you normally use credit. Read the offer carefully. The requirement language is always specific about timing, and a single day off can kill the payout. Now for the traps. These are the reasons most people think bank bonuses are not worth it, and every single one is avoidable if you know they are coming. Trap number 1 is the early closure fee. Close the account too soon after getting the bonus, and the bank will claw the money back. Most banks enforce a 6-month waiting window. Your job is simple. Mark the date on your calendar and leave the account open past it. Trap number 2 is the funding source rule. Many banks block transfers from certain payment apps or from other accounts at the same bank. If the fine print says the transfer has to come from an external bank, it means an external bank. Trap number 3 is what actually counts as a direct deposit. For some banks, only your employer payroll counts. For others, you can use certain peer-to-peer apps or even a scheduled transfer from another bank. You have to read this line of the offer, not guess. Trap number 4 is the tax form. Bank bonuses of $10 or more get reported to the IRS as interest income. You will get a 1099 INT form in January. The bonus is still worth it, but it is not tax-free. Plan for that. So how do you actually get the money? Here is a simple 5-step playbook. Step 1. Pick one offer at a time and read the terms all the way through before you sign up. If you cannot tell after 2 reads what the direct deposit requirement is, skip the offer. Step 2. Open the account and immediately set up the qualifying activity. Redirect one paycheck to it, or schedule the transfer depending on the rule. Step 3. Put every key date on your calendar. The deadline for the direct deposit, the deadline for debit transactions, the early closure fee cutoff, and the date the bonus is expected to post. Step 4. Once the bonus posts, screenshot it and save the confirmation email. If the bank ever argues about whether you met the terms, that paper trail is your only defense. Step 5. Wait out the closure window, then decide. You either keep the account because you like it, or close it cleanly the day after the window ends and move on to the next offer. If you want to turn this into real side income, the strategy is called stacking. Open 1 new account per quarter, 4 per year. At an average of $300 per bonus, that is around $1,200 a year in free cash for about 2 hours of setup time per offer. Think of each account like a rotating crop. You plant it, you harvest the bonus, and then you either keep it in rotation or clear the field for the next one. This is not get-rich money. It is pay off a credit card or top up your emergency fund money, which for most people is exactly the kind of money that moves their actual financial life forward. Bank bonuses are one of the most reliable free money plays in personal finance, but only if you respect the fine print. Read the terms, hit the requirements, mark the dates, wait out the closure window. Do that, and you can pull in 4 figures a year in cash with almost no ongoing work. If you found this useful, hit that subscribe button so you do not miss the next breakdown. And drop a comment telling me which bank bonus you are going after first, or which one you tried and the trap that got you. I read every comment. I am the Money Mind. Let us keep building.